So Rob, tell us quickly about your assets under management, where they are, and how they're performing.
Sure, Peter. We have about $40 billion of assets under management. We have businesses, major cities in the US, in Europe, in India, China, and Brazil.
That's a wide range. How are you deciding where you want to put your focus?
Well, we have created our own operating companies, our own platforms in every market where we develop and acquire property. So for us, it's a big commitment to choose a new market because it involves creating a lot of people infrastructure on the ground, as well as obviously a financial investment.
Well, what do you see as the biggest challenges going forward, both in the U.S. and abroad, in terms of acquiring properties, managing properties?
For us, because we operate at a global scale and because we are effectively our own operating partner, the biggest barrier is always people. Because in every city where we do business, we need the most talented meaning the ability to keep the best and the brightest. Because everywhere we do business, we are competing with local operators who do nothing but operate in one city. And in order to compete effectively with them, we need the best people on the ground everywhere we are. And so that competition for essentially human capital, for intellectual capital, is the biggest challenge to our business.
And of the, say, three major emerging markets that you're in, Brazil, India, and China, that's a wide spread there. Do either one of those, any one of those, have particularly difficult challenges, or do you find it relatively easy to do business?
First, nothing's easy, and I think that's part of what creates the opportunity. And the farther you go from your home base, the more complicated it gets, the more exotic it gets, the more challenging it gets. China, India, and Brazil are each completely different. We're often asked to compare the three because they're all categorized as emerging. I would argue that they're emergent by now, right. But I think they all pose different challenges. China, as an example, has a government that's very hands-on, very effective. We found them to be a great partner as we've launched and built our business there. And so the political system there, from a real estate standpoint, has been a big advantage. That's not necessarily the case in every emerging market. You're not advocating for a change here, are you? No, listen, I'm talking from a pure real estate standpoint, right. Not an ideological standpoint.
And where are your funds coming from? Are they coming from institutional investors, high net worth?
It's all of the above, but I would tell you it's extremely global. So okay. As an example, our basket of institutional investors, the majority of them are outside the US. I think cross-border investing has become a more and more potent force in all the markets, and frankly, including New York. If you look at what's driven real estate values here in New York the last couple of years, a lot of it has been capital, not just from outside the US, but outside this hemisphere that wants to get invested here. An interesting dynamic has emerged in the property sector, which is that many financial institutions want to downsize, if not get rid of, their real estate exposure. So that could mean disposing of non-performing loans, that could mean simply selling assets. But if you are a buyer with capital, it's created real opportunity to buy great real estate in the top cities at values that wouldn't have been possible, say, a year ago.